The dispute between Ripple Labs, a company that created XRP, and the Securities and Exchange Commission (SEC) of the United States has astonished those working in the field of financial technology. This fight comes at a time when digital currencies are becoming increasingly popular. In this particular case, the lawsuits are not being filed against a single corporation or form of digital currency. This marks a significant turning point that has the potential to alter the overall regulatory framework governing the Bitcoin industry. As our understanding of this issue expands, it is essential that we consider the implications that this case may have for the future of digital currencies. In 2012, Ripple Labs, which was founded at the time, came up with XRP with ambitious goals in mind to revolutionize the way that the world deals with money by utilizing digital currency and means of payment that operate in real time. Bitcoin is a decentralized digital money that was established by its creators. Ripple, on the other hand, endeavored to collaborate with financial institutions in order to expedite and secure international money transfers. Within RippleNet, XRP functions as a bridge currency that facilitates the exchange of currencies and the conduct of business across international borders. Because of this, XRP is able to hold a special position in the realm of digital banking, and it demonstrates that it can be utilized for purposes more than simply retaining wealth. Ripple has a well-defined objective, which is to facilitate the movement of value in the same way that information is already able to accomplish. This is a concept that, if completely implemented, has the potential to alter the way that global banking operates. As of December 2020, the Securities and Exchange Commission (SEC) has filed a lawsuit against Ripple Labs, alleging that the business and its executives had sold unregistered stocks worth $1.3 billion using XRP. The Securities and Exchange Commission (SEC) brought to light the fact that XRP was offered for sale as an investment to individuals in the United States without adhering to the regulations that govern federal securities. The Bitcoin markets were significantly impacted as a result of this action. A significant number of platforms deleted XRP from their lists, which resulted in a significant decrease in its price. In the immediate aftermath of the event, individuals began to question whether or not cryptocurrencies were to be classified as securities or as goods. A rebuttal put out by Ripple is predicated on the notion that XRP is not a security but rather a currency or a means of exchanging money. They based their argument on the Howey test, which is a criteria that is utilized by the Supreme Court of the United States to determine whether or not an agreement constitutes a business contract. Ripple has the potential to establish a significant legal precedent if it is successful in asserting that XRP does not satisfy the criteria of this test. This precedent has the potential to prevent other cryptocurrencies from being categorized as securities in the same manner, which would result in a shift in the way regulations are implemented. As a result of the SEC's lawsuit, the market value of XRP experienced a significant decline. Despite this, Ripple Labs has exerted a great deal of effort to assure that partners and investors, putting the emphasis on their legal status and the fact that they are continuing to operate. Despite the lawsuits as the primary focus of attention, people have become more cautious in the cryptocurrency market, particularly when it comes to coins whose legal status is unclear. This has resulted in a change in trading and investing strategies. The Ripple CC action has piqued the interest of a significant number of regulatory organizations located all over the world. A significant number of them are investigating the implications that this has for their own crypto regulatory systems. In some countries, such as Japan, XRP is recognized as a form of cryptocurrency, not a security, which demonstrates how different regulatory approaches are utilized in different parts of the world. These diverse responses from various nations have the potential to influence future policymaking on a global scale, which may ultimately result in more unified financial regulations. According to those who specialize in the law, the Ripple case has the potential to be a watershed moment in the regulation of cryptocurrencies. They speculate on what might occur and what that might entail for the market as a whole by drawing analogies to circumstances that have occurred in the past with regard to finances. With regard to the actions that the SEC need to take, various attorneys have varying opinions. Some people believe that they went too far, while others want more stringent regulations to improve investor protection. The dispute between Ripple and the SEC has a significant impact on the economy to a great extent. By making things more transparent and instilling greater confidence in individuals, a ruling that is favorable to Ripple could be beneficial to the cryptocurrency industry. It's possible that this will result in more adoption and new ideas. On the other hand, a ruling that is not favorable to Ripple could result in more stringent regulations, which could impede the development of new ideas and growth in the industry. There is a significant amount of money at stake, and it is possible that the entire world of digital currencies is on the verge of collapsing. A variety of individuals within the community, as well as investors, have held a variety of perspectives regarding Ripple. The cryptocurrency community has reached out to one another in a variety of different ways, with a significant number of individuals openly and through their activities on social media supporting Ripple. Investors, on the other hand, continue to exercise caution since they are unsure of the outcome of the case or the impact it will have on the market as a whole. There is a wide variety of perspectives which demonstrates how difficult the connection is between the actions of the government and the functioning of the Bitcoin market. As a result of the SEC lawsuit involving Ripple, a standard may be established that either promotes the development of new ideas by making rules more transparent or that impedes growth by imposing restrictions on it. The interpretation of existing financial rules and the manner in which they are applied to digital currencies may have a significant impact on the subsequent development of cryptocurrencies. Discovering the optimal balance between safeguarding the interests of investors and furthering technological development is a challenging task for both entrepreneurs and regulators. After considering the implications that the lawsuit brought by the SEC against Ripple has for the Bitcoin sector, it is abundantly evident that the case represents a turning point. Not only will the ultimate judgment likely have an impact on the future of Ripple and XRP, but it will also most likely have an impact on the policies that govern the regulation of digital currencies all over the world. In order to successfully navigate these difficult regulatory seas, careful planning and forward thinking will be required. Not only from businesses such as Ripple, but also from persons who are responsible for enacting regulations and laws. Experts in the field of financial technology continue to hold a variety of perspectives regarding the future of digital currencies and the potential outcomes they may provide. While some people have a positive outlook on the future, believing that clear rules would assist in the expansion of enterprises, others are concerned that an excessive number of restrictions may prevent the development of new ideas. Throughout the duration of the Ripple case, investors, lawmakers, and the entire financial industry will undoubtedly devote a great deal of attention to the investigation. Additionally, it will establish the rules that will govern the relationship between the law and new digital currencies in the years to come.